Today, we're diving into an analysis of OMER Corporation's massive 75% stock jump after its FDA approval for Yartemia.
The report argues this is a fundamental game changer, not just a short squeeze. So let's get right into it.
Okay, first off, the energy here it's palpable. You really feel the explosion in the market.
Absolutely. It captures that urgency, that euphoria of a big regulatory win. But, I think that intensity might actually be the first area we can look at.
That's exactly where I was going. While the report effectively communicates the sheer scale of the market reaction, the intensity of the rhetoric may overwhelm the analytical credibility.
Right. That's the core of it. The weakness here is that the language leaves almost no room for any counter-narrative or even just a little healthy skepticism.
You see lines like, "This is not hype," in all caps.
And right after that, it says, the stock is trading at a 50% discount even after it's already exploded. That level of certainty.
It can be a red flag. It risks alienating the exact kind of sophisticated investor who knows that in biotech, there's always another risk around the corner.
Yeah, the whole analysis feels very front-loaded with that excitement. The gap and go, the squeeze, and it kind of overshadows the shift to what really matters now.
Which is execution.
Exactly. So the suggestion here isn't to dial down the enthusiasm. The win is historic.
Of course.
But it's about integrating the next set of risks, the commercialization risks. That's what makes an analysis robust. It shows you're thinking 2 steps ahead.
So how do we do that? What's a concrete way to build that in without killing the bullish vibe?
Well, let's look at the financial safety net it mentions, the $240 million in cash from Novo Nordisk.
The report presents it as a complete solution. No dilution is needed, it says.
Right. But is that really true? I mean, a better way to frame it would be to explore the limits of that idea. Is that cash enough for a full global launch through 2026?
Or is it just a very comfortable runway that pushes the next financing decision out of it?
That's a much more sophisticated take. It acknowledges the strength without making an absolute claim.
And it builds credibility.
And then there's the line about uncertainty is gone. That's a huge claim. The uncertainty hasn't vanished.
It's just shifted.
It has completely shifted. The FDA risk is gone, yes, but now you have a whole new set of uncertainties. Market adoption, reimbursement bids.
Sales trajectory, all the commercial stuff.
So, a concrete way to fix this is to explicitly contrast those risks. You could say something like, the existential risk of FDA rejection is now 0. The focus shifts entirely to the moderate but complex risk of launch execution.
I like that. And then you could even list the key metrics to watch.
Yes. What's the early payer mix look like? Are the top transplant centers adopting it quickly? It shows the analysis is already looking ahead to the next chapter.
And that makes the golden opportunity thesis feel earned, not just declared. It's built on a clear-eyed view of the future.
It's conviction built on foresight, not just hype.
Okay, let's move on. This actually flows nicely into the second point, which is about the drug itself.
The core of the story.
The analysis correctly calls the approval a fundamental game changer because Yartemia is the first and only treatment for TATMA. But then it almost immediately minimizes the medical context that makes that claim so powerful.
This was the biggest missed opportunity for me. The weakness is so explicit. The report literally says, now don't let the medical jargon bore you, and then pivots straight to the financials.
By doing that, by dismissing the why, it misses the chance to really anchor the financial opportunity in something real.
In human need. If this thing changes everything, you have to make the reader feel the stakes. Why does this matter so much?
The bridge between A, a life-saving drug, and B, a potential multi-billion-dollar valuation, feels a little shaky.
It's not fully built. To justify a $36 target, you need more than just a regulatory stamp of approval. You need to understand the magnitude of the clinical problem being solved.
So the suggestion is pretty straightforward. Dedicate just a little more space to contextualizing the severity of TTMA. You don't need to be a doctor to understand it.
Not at all. This will amplify why First and Only is such a huge deal and create a much stronger justification for that massive stock move.
So instead of that line, "Don't let the jargon bore you," what could it say instead?
Something vivid, something with impact. Give a concrete example.
Like what?
You could briefly mention the extremely high mortality rate for this complication before Yartemia, or frame it around the urgency of what happens after a stem cell transplant goes wrong.
That immediately anchors it in something serious. It's not just an acronym, it's a deadly complication with no other options.
That's where the industry's pricing power comes from. It's the why.
And once you've established that why, you can connect it to the how much.
Exactly. Right after explaining the severity, you could give a quick estimate of the patient population size or the potential treatment cost.
So you go from, this is a deadly complication, straight to, and this is the potential revenue, which is launching next month.
It connects the medical breakthrough directly to the financial opportunity. It makes the whole thesis feel more grounded, more inevitable.
Right now, it just jumps from historic to stock charts, and that middle piece is missing.
And filling that gap elevates the whole piece from a trade idea to a real, fundamental investment thesis.
Okay, that brings us to the end of the report, the verdict section. This is where all that analysis is supposed to turn into a clear, actionable step.
And where I think things get a little confused.
I agree. Our third point is that by blending multiple time horizons, the verdict creates confusion about what to actually do. It tries to cater to everyone, day traders, swing traders, and long-term investors, and the guidance gets muddled.
That's the weakness in a nutshell. It's trying to serve too many masters in one paragraph. You've got these technical floor targets.
The $14 to $15 retest.
Then it jumps to a psychological resistance at $20, and then it pivots again to the long-term golden opportunity based on that $36 analyst target. It's a lot.
It's whiplash. And if I'm reading this because I believe in the fundamental story, which is the report's greatest strength, I'm left wondering what my move is. Do I trade the range? Do I wait?
The technical levels just feel like noise. They feel disconnected from the main thesis. Is the connection between that $15 floor and the $36 target ever really made clear?
No, not really.
So the suggestion is to refine that final section. Structure the advice to prioritize the long-term thesis. That is the core strength of the report.
And frame those short-term technical levels explicitly as entry strategies for that long-term plan.
They're tools, not separate trade ideas.
That's the perfect way to put it. They are tools, not targets. So let's give a concrete example. How do you reframe that $14 to $15 level for a fundamental investor?
You have to link it directly. Instead of just saying it's a floor, you frame it as a defined high-conviction entry point for the long-term thesis.
So you're telling the reader to use the volatility.
Exactly. Use this technical retest to build a position with a great risk-reward ratio against that $36 fundamental target.
It changes the entire perspective. Volatility isn't something to fear. It's an opportunity to buy an asset you believe in cheaper.
And you can take it a step further. Given that the drug launches in January 2026, the real resistance for a long-term holder isn't the $20 price level.
It's time.
It's time. It's waiting for those first few quarterly sales reports to prove the thesis is playing out.
So the final advice should be focused on conviction, on patience, on holding through that execution phase.
It all has to serve the central claim. This approval changes everything. If that's true, then the only advice that matters is how to best position for that long-term change.
This has been a really productive look at a report on a huge market event.